Whoa! On December 22nd, the Indian stock market sent a jolt of electricity through the system that had absolutely everyone talking. We're talking about a massive single-day surge. So, what exactly happened? More importantly, why did it happen? And what are traders looking at for what comes next? You know what? Let's break it all down.
Okay, let's start with the headline number of the day. A stunning 206-point gain for the Nifty index. Look, a jump that big in just one session, that's the kind of move that makes everyone, from day traders to long-term investors, sit up and pay very, very close attention.
So that 206-point jump? It pushed the Nifty to a powerful close right around 21,672. And it wasn't the only one having a good day, not by a long shot. The Sensex also just roared ahead, closing near 72,567. And get this, it was the second day in a row of gains. A very green picture on the charts, for sure.
So, who were the heroes of this story? I mean, where did all this energy come from? Let's take a look at the specific stocks and sectors that were really responsible for driving this incredible rally.
You know what's really interesting here is the leadership. Shriram Finance was out in front, leading the whole pack with a huge 4.10% gain. That signals some real strength in the finance sector. But the buying wasn't just in one place, it was spread out. You had names like Max Health and Power Grid also posting gains well over 2%.
And this really shows that the rally wasn't just about a few star performers. No, the momentum was broad. You had the big engines of the economy. We're talking capital goods, metals, and IT all climbing by about 1%. That tells you there's widespread positive feeling in the market, not just a few isolated pockets of strength.
Okay, so what is actually powering this engine? Let's dig into the key factors that all came together to create such an incredibly bullish day.
Well, one of the biggest drivers is just the sheer scale of the wealth being created. We're not just talking about some abstract points on a chart here. We are talking about a real, tangible increase in the value of what investors are holding.
And here's the scale of it. The total market capitalization, that's the combined value of all the listed companies, hit a staggering 475 lakh crore. To put that in perspective, that's over 5.7 trillion US dollars. The amount of wealth added in such a short time is just immense, and it's a huge confidence booster for the entire market. Now, behind that huge number, there's a really fascinating demographic story playing out. A whole new generation is jumping into the market. As you can see, investors under the age of 30 now make up a substantial 40% of all participants. This flood of new capital, and frankly a higher appetite for risk from younger folks, is a powerful force helping to drive growth.
And this is a really crucial point: how different groups of big-time investors are behaving. For a while now, domestic institutional investors, the DIIs, have been the consistent buyers, kind of holding the market steady. But now we're seeing foreign institutional investors, the FIIs, come back in with positive inflows. And when both of these heavyweights are buying at the same time, well, that just adds some serious fuel to the fire.
And really, it wasn't just one single thing. This rally was supported by a whole cocktail of positive factors. We had good news from global markets giving us a nice tailwind, that classic pre-holiday festive boost lifting everyone's spirits, and a general feeling that central banks around the world are easing up on interest rates. It was pretty much a perfect storm of bullish signals.
All right, so after a day like this, the big question on everyone's mind is what happens next? Let's take a look at what the technical analysts are watching for in the immediate future.
But first, a super quick primer on two terms you're going to hear a lot. First is resistance. Think of it like a ceiling, a price level the market might struggle to push through. The opposite of that is support, which is like a floor that might stop the market from falling any further. Got it? Ceiling and floor. That's key for what's coming next.
Okay, so here's the game plan for the bulls. The first big test is to break through that resistance ceiling we just talked about, right at the 21,600 level. If it can do that, the next target analysts are eyeing is up in the 21,750 to 21,800 zone. And that support floor, that's down around 21,400 to 21,300. That's the critical level that really needs to hold to keep all this positive momentum going.
Of course, markets rarely move in a straight line, right? So, analysts are also keeping an eye out for a potential short-term pullback. If that were to happen, the level around 21,200 is what many are calling a buy-on-dips opportunity. Basically, a spot where buyers might jump back in, thinking the lower price is an attractive deal. So, as we wrap up this look at a pretty powerful day in the markets, we're left with one big question.
Was this the start of that much-anticipated end-of-year Santa rally? A period of sustained gains? Or was it just a single, exciting flash in the pan? The answer will probably be found in those key levels we just talked about. We'll all be watching.